In this episode of Wealth Tales, we will examine the severity of the Chinese economic situation. Let us begin, shall we? The unexpected decline in Chinese overseas commerce can be attributed to the combination of weak demand on a global scale and corona lockdowns in China. The customs authorities in Beijing reported that the value of shipments denominated in US dollars dropped by 8.7% when compared to the same month the previous year. It was the second drop in a row for the monthly total. The 10.6% drop in imports was significantly worse than what industry analysts had forecasted. A drop of 9.5% occurred in international trade, which is an even more severe decline than the drop of 9.3% that occurred in May 2020 when the epidemic first began. The zero-COVID policy creates obstacles for production to overcome. One of the primary reasons for the decline in exports is the sluggish demand all over the world, which is the result of rising inflation and the cost of energy brought on by Russia's involvement in the conflict in Ukraine. In spite of this, production is becoming more challenging as a result of China's stringent zero-COVID policy, which has disrupted supply chains in China. The widespread lockdowns and the ongoing crisis in the real estate market are putting a significant amount of strain on the economy of the world's second-largest country. This also has the effect of lowering domestic demand, which helps to explain the drop in imports. In October, both imports and exports experienced declines for the first time in over 2 years, with imports falling by 0.7% and exports falling by 0.3% respectively. On Wednesday, the State Council announced some measures to ease restrictions. You can find out more about it here. The slowdown in China's participation in international trade is having a negative impact on German exporters as well. There was a 17.5% drop in the amount of German goods exported to China. Additionally, China's exports to Germany fell by 14.4% during this time period. The decline in the value of Chinese exports to the United States was even more dramatic, coming in at 25.4%, while the decline in the value of Chinese imports from the United States was 7.3%. There is an almost 100% chance that the growth target won't be met. Since the beginning of the epidemic approximately 3 years ago, export expansion has been a vital pillar of China's economy. Experts believe that the weakened Chinese economy would struggle to cope with the drop in international commerce. This is because export development has been a vital pillar of China's economy. The GDP growth target that the government has set for this year is 5.5%, but analysts have long predicted that it will not be achieved. According to a report published by the Japanese financial organization Nomura, it is highly unlikely that the economy made significant progress in November due to the fact that lockdowns affected cities and areas that normally contribute up to a fifth of GDP. Only slightly more than 2% is anticipated for the fourth quarter at this point. The World Bank forecasts that China will experience growth of 2.8% this year, following the country's 8.1% expansion the year before. The Chinese government has taken a number of steps to stimulate the economy, including increasing investment in infrastructure, lowering interest rates on loans, providing tax breaks, and making it easier to acquire real estate. However, the greatest wave of corona infections that has occurred in the People's Republic since the pandemic's beginning more than 3 years ago, as well as the subsequent largely zero-COVID limitations, have reduced the effectiveness of the stimulus measures. Facilitating the implementation of quarantine and testing requirements. A few weeks ago, the authorities relaxed the quarantine and forced testing policies, particularly in light of the significant wave of protests that took place against the stringent COVID restrictions at the tail end of November. Infected individuals might also choose to isolate themselves in this manner at their homes. In addition, many metropolitan areas no longer have a requirement for ongoing negative PCR testing in a variety of locations, such as at the doors of stores and residential complexes. Following a meeting on economic policy the day before that was presided over by Xi Jinping, the leader of both the state and the party, the Politburo reaffirmed in a statement on Wednesday that it wished to promote stability. It is imperative that a preventative fiscal and monetary strategy be developed. It would be necessary to optimize the protocols that are currently in place to control and prevent widespread corona infections. It is essential to take decisive action to boost market confidence and achieve price stability while also maintaining growth and employment levels. Despite this, the World Bank urges additional structural changes and cautions against taking unnecessary financial risks. China's economy is still facing a fundamental slump in the medium term. The potential for growth is decreasing as a result of unfavorable demographics, sluggish manufacturing development, and the increasing limitations of an economic model driven by debt. What does this mean for China, in your opinion? Leave a comment below. Thank you for taking the time to watch Wealth Tales.